Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 16th of February 2020. And yesterday we published our gold and silver weekly update for the week ending the 14th of February, details of which we've placed in the description box below. We also published last week our gold 2020 forecast, again link below, and our silver 2020 forecast in the inner sanctum, which will be released generally late next week. Now today we're going to touch on a slightly new subject called frontier markets. But before we do that, we wish to put into context why this area is important. We reported in our weekly update yesterday that the Dow Jones closed on Friday at 29,398. The NASDAQ closed at 9,731 and the S&P 500 closed at 3,380. All very close to their all-time highs, having set multiple all-time high records over the past few months. Now, whilst we're of the opinion that these indexes will continue to hit all-time highs for a large part of this US election year, as you can be confident that President Trump will do all that he can to ensure the stock market achieves this, as it reflects on his economic success and the probability of his re-election, we are also not blinded to the fact that eventually what goes up must also come down. We are also not blinded to the fact that these indexes are to a large effect influenced by just a few stocks, and such has been their outperformance, it will be difficult for their earnings to catch up and justify their stock price in the long run. This then leads us to what equity stocks should one consider. Now, the true gold and silver purist will say none, just plough all one's monies and investments into gold and silver. But in the real world, that will not happen, as all it would take would be perhaps a few tens of billions of dollars to enter that marketplace, and gold and silver too will be in the same bubble territory that some of the leading equities are already in. So, looking at equities, where is safe? Well, we've touched on emerging markets previously, and some countries which are currently regarded as performance dogs, investment term, until recently, Russia being one of them. However, even some of these markets are becoming to look expensive or risky, and again are dominated by some of the largest players. So let's take a look at an article written this week in Financial Advisor magazine by Rupert Thompson, who is the Chief Investment Officer at Kingswood plc, a wealth and investment management group headquartered in London, but with offices throughout the United Kingdom. Frontier Markets Show Potential by Rupert Thompson, Chief Investment Officer at Kingswood. Financial Advisor article dated 13th of February 2020. The equity bull market of the past decade has been led by the largest market, the United States. Over the past year, the bull run was led by the very largest corporations and has become even more concentrated. Put simply, bigger is better has been the way to outperform of late. However, this mantra may be reaching its sell-by date. These segments of the market now look increasingly expensive relative to other areas, and the time may be ripe for cheaper and more neglected parts of the market to outperform. One area we believe has attractive characteristics is frontier markets. There are 195 countries in the world. Of these, 51 are classified by the major equity index providers as developed or emerging markets. The remaining 144 countries make up the so-called frontier markets and include a wide range of countries at varying stages of political, economic, and financial market development. The total market capitalization of the MSCI Frontier Markets Index amounts to only $118 billion, or 91 billion pounds, compared to $6.2 trillion for emerging markets and $44.7 trillion for developed markets, and includes only 92 stocks. The obvious question is, why bother with this tiny corner of the equity universe at all? The reason is that frontier markets have a variety of unique features warranting their inclusion in a global equity portfolio. These markets are, by definition, still in the relatively early stages of development, both in terms of their economy and financial markets. Their ability to catch up, combined with their fast-growing and young populations, provides the potential for strong long-term growth. If this potential is to be reached, it needs to be combined with structural reform, political, economic, and financial, and this varies enormously across frontier markets. Africa, for example, would superficially seem to be well placed given its very favourable demographics. The reality is that poor power supply due to the lack of appropriate reforms is a major constraint on growth across the continent. By contrast, Vietnam and various countries in the Middle East, such as the UAE and Kuwait, have embraced reform and are much more fertile areas for investment. The need to be highly selective when investing in frontier markets is due not only to the big divergence in economic prospects, but also to the widely differing levels of corporate governance and management skills across companies. The gap between the good and the bad is particularly wide in frontier markets, and strong management with a good track record of business execution is essential. Even if a company is enjoying strong earnings growth, a key consideration is whether the benefits will actually accrue to minority investors. These opportunities, along with the paucity of research available on frontier market companies, mean that there are large inefficiencies in stock market pricing, which can potentially be exploited by extensive on-the-ground research. Most foreign investment in these markets is typically concentrated in the few biggest stocks, which trade at high valuations similar to their peers in developed markets. The opportunities lie not in these companies, but in the smaller, under-researched companies where foreign ownership is still low, but has scope to increase significantly. Frontier markets are a classical area where investing via an active manager with the necessary expertise and resources makes much more sense than via a passive exchange-traded fund. The latter will track an index that is inevitably backward-looking, which is a disadvantage in fast-growing economies and capital markets. The index will also comprise only the largest, most liquid companies, which in frontier markets are often not where the best opportunities lie. Finally, the distinction between the smallest countries in the emerging market indices and those classified as frontier markets is somewhat arbitrary for the purposes of an investor. The same type of opportunities can exist in both, and an active fund that is benchmark agnostic and has a remit to invest in both areas has distinct advantages. The Magna New Frontiers Fund, run by Fiera Capita, is one example. The manager has a long track record of investing in the region, focusing on undervalued, under-researched companies with strong growth potential. A major attraction of frontier markets, therefore, is the potential to find stocks at cheap valuations with good long-term earnings growth prospects. Frontier markets are also a good way of diversifying one's equity exposure. Their correlation to both emerging and developed market equities in recent years has been relatively low, at around 0.55 and 0.50 respectively. This reflects the fact that the investors' base for these stocks is primarily the domestic investor, who is generally motivated by factors quite different to those driving investors in mainstream equity markets. Despite their clear long-term attraction, the fact is that following a strong run in 2016 and 2017, Frontier markets have underperformed developed and emerging markets in the past couple of years. This, however, in the main, just echoes the underperformance of value stocks across the investment universe. Frontier market valuations are now down to a 10-year low, and rising foreign ownership levels could well provide a catalyst for a re-rating over the coming year or two. Frontier markets may well once again have their day in the sun. End of article. So, the key takeaways from Rupert's article are 1. Frontier markets have opportunities for investors. 2. Much depends on political and economic development. And 3. Opportunities lie in under-researched companies. Now, as with all investments, we have to say there is always inherent risk. With investments such as these, the risks are greater in that transparency tends to be lower, the markets are less liquid, at least right now, and one has to quite often undertake one's own research or pay someone to do it who is located where those businesses are. Now, this is certainly where we at Illuminati Silver will be looking at over the coming months, and will happily share our knowledge and information within the inner sanctum if there is a demand for it. We would love to be able to say with confidence that gold and silver investment is the only answer, but the truth is that a well-diversified portfolio, which includes most of the traditional asset classes, plus some adventurous ones, plus gold and silver, which many investment managers or advisors leave out, as to date has served us well, and served well those clients we used to advise. We suspect also the same will stand for the future as well. Also, please bear in mind that even if you haven't the funds or resources or interest to invest broader than gold and silver, it's still worth knowing about those asset classes that are likely at least to attract funds which could or should have gone into the precious metals space. There is a large investment world out there, and we within our space are just a small part or microcosm of a much larger, wider investment body. Now finally, for those of you who follow our other two YouTube channels, Richard and Greg and Trump for President 2020, we've recently posted new videos on them and have provided links below if you've not had the opportunity to visit. Later today, Greg will be speaking on climate change again, and Inner Sanctum members will find on the controversially Greg section that he has posted a serious number of articles on that subject too. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you are notified of videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.